Hello, this is John Borimler from CEEFinTech.com. On my right, we have Mr. Samee Zafar, who's a strategy consultant and who's a veteran of payments in Europe. Mr. Zafar is based in London, and he's more focused on the western part of Europe and on the States than Central and Eastern Europe. So for this reason, I'd like to ask a couple of questions about what is going on in London these days or in the States in the area of fintech.
I think there's a lot of stuff going on in fintech. There are just so many interesting companies that we look at, we talk to. For example, in the UK alone, there is a new revival of specific niche areas in financial services. So for example, insurance, which has lagged behind, but now sort of fintech digital companies are coming up in the insurance sector. Lending has been always really a stronghold of the credit card companies in US and UK. And in Europe, it has been very much installment lending and point of sale finance that the stores have provided. But now these new companies are coming in and providing what we call checkout finance. So even PayPal is doing it. So you actually go to a website, you buy something, and instead of just an option to pay with your Visa or MasterCard or Amex, you get an option of paying it now or later, or just converting it into installments. So a bit like what Klarna started in Sweden, but that is, that's a lot of companies are going into that area. There is, of course, a lot of interest in general banking and investment management. That again is a very, stronghold of the banks, and these other companies are coming. So I think banks do have a lot to worry about, but maybe not so much in the immediate future, because they'll still have people who bank with them. But these new companies are coming and attacking areas where banks have overlooked or have not been so interested because of the risk implications. And from there, they're trying to get a foothold and then go and expand from there.
This is an ongoing debate if fintech startups or fintech companies are threatening the existing banks or existing financial institutions. So what is your position on that? From my side, I'm not that radical that this is a huge threat at this moment. Perhaps in the future. How do you think, what is going to happen?
Yeah, I think you're right. I don't think it's an immediate threat because consumers are very slow to change their habits. They're slow to change their financial services providers. But if you look at, for example, in the US, student debt is a massive problem. It's not so much in Europe because this education is free in many countries. But when students start out, within a few years, they are, they're burdened with massive amounts of debt, and banks generally don't cater to that sector. So you got lots of companies coming in that area because banks don't want to touch that sector. And what they want to do is they want to create a feeling of loyalty with students and then build on that to provide them with financial services that will take them as they grow older, become richer, So, they have changed the way they credit check people, because banks credit check a student and say, this guy is a bad prospect because he's got so much debt. Whereas those companies go in there and say, look, he's got a medical degree maybe or an engineering degree from a good university. I don't need to do a FICO score on this person because this person is going to be making a lot of money in 10 years' time. So they actually take them from there. They look at your digital footprint. They look at what type of presence you've had on social media sites, what type of connections and friends you have. And based on that, they would actually score your trustworthiness rather than your creditworthiness.
That's right. So there's a big hype about fintech companies, and there's also a big hype about artificial intelligence these days. And there's an intersection of these two, just like you mentioned, credit scoring or insurance. What are the hot spots of this market, in your view?
I think artificial intelligence has great promise, but I think we are still in the dark ages there. We've been talking about it for the last 30 years. So there is these robo-advisors and all sorts of other data analytics, predictive analysis. But I think we have so much data now, but we don't properly use even 1% of that data. And I think using the rest of the 99% is going to be a big challenge. Because you may have a lot of data, but you really don't know how to put it together and develop some coherent story or a recommendation out of it. So I think we're way behind that on that one. But maybe in a few years' time, new companies will think up of, for example, analyzing people's financial services needs, but more in a self-service manner. People will actually be able to use programs to much better pick up stocks that they want, much better pick up investment funds that they like, have a better analysis of their payments, understand if they can switch to save fees. I think we still don't have that as yet.
That is right. As you mentioned, there's a lot of data around transactions and around customers who are doing the transactions. And of course, it has some legal implications like data protection. You have in the UK an ongoing project about open banking, and you are going to provide some standards to the banks. In the European Union, there's the Access to Account initiative also, which is about sharing data. So data is key. How strongly do you think the data protection acts will influence the free access to data in this world?
Yeah, I think so. I think there is sort of banks and companies would need to, or the whole ecosystem will need to balance the two things. So you're right that this API movement that is being regulated, that banks will have to open up their accounts to third parties. So as I may have an account in a particular bank, but my payment provider, my financial services provider may be another company who has access to my bank data. So I think data protection is going more and more towards me as a consumer controlling who I provide my data to. But I think there's another issue as well in terms of how that data is used, how that, what happens if the data is lost, if there is a breach of data. And that, the breach of data has not been so well regulated in the sense that who is going to pay for the loss if there is a problem. But I think there will have to be very strong standards that these new companies will have access to bank data, my bank data. I give them permission that they only use my data for what I allow them to do. And I think that's something that will have to be really looked into in the future.
We have talked about the legal part, which is in my view the burden of accessing data. The other part is an opportunity, which is in my view a business opportunity. What I expect that a new marketplace is going to be built up in the future for handling the data. In my view, in a pretty similar way as how the transactions are being handled now. What is your guess, or what are your expectations? What is going to happen with the data and with the market?
Yeah, I mean, I'm not sure if you mean a data market in the sense that there will be companies that will be holding data on your behalf, right? Is that what you mean, or?
Either that or setting up data schemes who are giving authorization to third parties to access the data, or just manage how the data exchange is being done.
Yeah, and I mean, you could provide your data to a third party for the third party to provide you with services or do analysis. You're right. I mean, I could sell my data and I could get some money or benefits, and then the third party would gather all that data and then could sell that data further to other people in terms of, and this would be legally obtained data. And so that could happen as well. But I think still the big issue would be, even if you have lots of data, And even if you have bought that data legally and with everything properly ticked off, how can you use your algorithms and analytics to really generate something meaningful out of it? Because I think still the hit rates are so slow in terms of, there'll be more junk mail, there'll be more offers for things that you may not need. So I think that last bit is the most critical bit, and we still haven't cracked it as yet.
All right. So looking at it from the distance, how do you find the CE region? How mature do you think it is from the fintech perspective or from the payments perspective? Or how appealing do you think it is for existing players from London or from the States?
I think quite a bit, because everybody knows that in the CE region you have exceptional talent. There are lots of companies who go, for example, for their software development to Hungary, to Poland, and if you look at even countries like Romania and more eastern countries in Europe, there's exceptional talent, particularly in computer software design. But also the younger population is very internet savvy. It's very savvy with social media. Traveling in Poland, you see that the Polish young people are far more familiar with their digital footprint than perhaps young people in Western Europe are, or in the US. Hungary is famous for its all the chess players. You got all the chess players and stuff. So it's quite famous for its technical expertise. All the young people speak English. So I think in the future it's not just to source programmers, but I think as a region, the region as a whole is going to be a very attractive market for Western companies to sell their digital services to.
How many years?
It's always.
This is a tricky question.
Whenever you ask a question, I'll say, 3 years or 6 years. No, I think it's already happening. But previously, people have said, well, these are smaller countries, so I don't know, if I can invest in a smaller country. But now with European Union and the benefits of a digital company, it's easy to enter a new market if you're just selling. We look at Netflix. For Netflix, it's not such an issue to enter a new market because it's more negotiations and stuff. But in terms of infrastructure, the internet is already there, so you can actually sell your services there. If a taxi company wants to a new country, the mobile app is there. You just need to recruit people to become drivers. So I think it's easier for digital companies to enter new markets and actually thrive there.